So, hey everyone, just want to thank you for joining us today. This is a little bit of a different sort of a format than we will typically do, only because we had some scheduling conflicts personally and a whole lot of different time zones to adhere to as well. So, we thought, let's just go ahead and get together and pre record this and get the information out to you guys, because that's actually really the most important thing. We got Gavin as well as Dan with us today. Thank you both for being here.
Thank you for having us.
No problem at all.
Thanks, appreciate it. So, meat and potatoes today is what this is going to be about. This is the financial services in depth, and this is also discussing the zone tiers. We're going to get into detail, at least Dan is going to, about the actual financial services, how they work, typical ROIs, past performances, just kind of all the nitty gritty. Of course, you guys will have more information as we get closer to releasing these. You'll have screenshots, videos about how they work, and of course, more information than you probably even want to have. But this is going to be just a quick run through, but it won't be the limitation of what we share with you. And then, of course, once Dan is finished explaining each service, I will share the zone tiers that are required to get access to those services. So why don't we start from the bottom to the top? We're going to start from the first service you get to the next one to the next one. Dan, I know we are going to be offering, or at least Gaxsys is going to be offering through XETA, a blue chip sort of trading service. You want to talk a little bit about what that is, how it works, minimum investments, ROIs that are typically sought, and just anything else you want to share about that?
Yeah, so the lowest risk tier we would class as blue chip. So anyone that doesn't know what the word blue chip actually means, blue chip is a word used to identify a stock, okay, of high investment quality. Okay, it usually pertains to a substantial, well-established company and enjoys public confidence in its worth and stability. That's actually the official meaning. Yeah. So I just wanted to quote that in case anybody doesn't know or has never heard the word blue chip. Okay. But in finance, blue chip is associated with safety. Yeah. Okay. And exactly what I just said, confidence. So as this is the lowest risk tier, obviously the performance of this tier is the lowest as well. Okay. But that does come with obviously the added benefit that the risk is extremely adverse. Okay. The majority of investors out there will already have this sort of managed account or at least section in their portfolio. Okay, a lot of companies that are classed as blue chip companies, usually you find these companies in main market indices like FTSE 100, Nasdaq, and S&P 500. Okay, they're usually companies that pay out large dividends. They aren't volatile unless obviously the whole market conditions are volatile. And as a collective, they can probably net you a few percent per annum. Okay, so in the UK we have a stocks and shares ISA. It nets somewhere between kind of 2 and 3% a year usually. Extremely low returns considering the cost of the inflation is actually higher than the performance of the account. So worldwide, everybody has these sort of the blue chip accounts. Yeah, is what we call them, low risk blue chip accounts. They're usually managed
Sure.
stocks and shares ISA, or to offset your capital gains or tax allowance.
Of course.
And basically, our blue chip account is obviously slightly different. Okay, it's more aggressive, it's more diverse. It allows our community to see more than just kind of a couple of percent per annum. Yeah, it's still risk adverse, and the simple kind of explanation for how we achieve this is we're not just holding the main market indices companies long term. Okay, so with any normal account, you would basically hold these companies in your portfolio for the whole year. Yeah, there isn't much trading going on. You're not, selling out of BT. Obviously, British Telecom over here is a very popular one for stocks and shares ISAs. It pays out huge dividends per annum. Probably not so much anymore, but it used to. And obviously we're looking to trade in and out, okay, of the companies 10 times more than any other sort of government account that would be offered, okay, or blue chip account. So, like I said before, it's similar to a stocks and shares ISA account, and you would get, that over in the UK all the time. Not almost every household has, a couple of stocks and share ISA accounts, okay, living in there. And, most kind of mom and pop financial advisors or your local IFA family offices, they offer these sort of accounts. But our account is going to be looked at the exact same concept, but it's just on steroids. Okay, so the returns that we're looking to forecast for that sort of account would be in the 3 to 5% tile. Okay, every month. That's purely down to my forecast at the minute because of the market conditions being better for us for these low risk accounts. Because obviously the market is, either extremely bearish one day and extremely bullish the other, which gives us, room for kind of buying and selling on a regular basis out of these main market companies. Does that make sense?
It makes a lot of sense. So let me ask a question. Is this trading done automatically with an algorithm, or is there actually like an individual wealth manager that controls each of these accounts separately?
Yeah, great question. So there will be an individual wealth manager, but it will more than likely just be a lower tier trader that we would obviously appoint to manage the XETA blue chip areas. Yeah.
Gotcha. So what is a
That's amazing. And I'm sorry, Dan, did you say 3 to 5% a month?
So 3 to 5% is what I'm forecasting. And remember, I just want to make this clear. Everything's speculative, yeah? In anything in the investment world is speculative. Everyone out there, if you have someone tell you that, they can guarantee this or guarantee that, it's just not sustainable. Yeah. And that's the whole kind of, ethos behind XETA. Yeah. Is this sustainability factor, especially in the crypto industry. So, I'm forecasting 3 to 5%, and that's because of market conditions currently. Okay, so if it was to go down slightly, okay, we were looking at kind of 2 or 3% a month. You're still looking at 20 to 30% per annum. Yeah.
That's amazing. And is there anything that we can provide our community to show them sort of a history that corroborates our?
Yeah, so what I wanted to say is obviously on this, AMA, obviously I'm going to be speaking a lot about obviously these services, but we do have literature coming out, guys, that will be available on the website, okay, which will show full track records, okay. In fact, I have them in front of me, so that they'll be published on the website. I've been told in the next few days. Which more than likely, Showtime, you'll be publishing them then on the Discord
Yes,
for
sir.
the community to see. So yeah, this will be privy to the public or our community. But obviously, right this second, we can't really publish them until they're processed onto the website.
Excellent. Excellent. Just a couple of other qualifying questions I'm sure some people are going to have. So, is there a vesting period with this, a minimum time that people need to leave their funds in?
So for the blue chip account, we're going to make it liquid. So there is no minimum, which actually is another bonus, okay, to the XETA community or zone holders, because of the usual kind of structure that would be in place for this sort of account would be a minimum of 12-month hold, or you'd be penalised, for liquidating early.
Gotcha. So there's no minimum. Okay, that's really great to know. So Dan, what are the minimum investment requirements for the blue chip service that, let's say I get to a certain number of zones, which we'll share in a moment, and now I want to invest in this. I want to move my rewards over and take advantage of this. What is those minimums? What does that look like for me?
Yeah, so great question. Okay, so for the blue chip tier, you would need 25 zones. Okay, it would then unlock the blue chip account service. Okay, and you would need to invest. You can invest whatever you like. Okay, for the blue chip account or for any of these tiers, but there is a minimum pooling service amount. Okay, so $25,000 is the amount. Okay, that would need to be pulled together in order for that capital to then be utilized, okay, and used under the blue chip model. Okay, so
Okay.
just to give you an example, if you got to 25 zones and you put in $5,000, you would then need to wait for five other people to put in, four other people to put in $5,000, or 20 other people to put in $1,000, yeah, to get to $25,000 before that capital is then used. But as a footnote, what I would say is that we're obviously conscious of the fact that we don't want capital sitting there not being utilized. So worst case scenario, if there was, say, $20,000 in there and it went a couple of days without anybody putting in the extra, then XETA may put in capital, ourselves to top it up, to then utilize it.
Gotcha. Makes sense. So this is almost sort of like a crowdsourcing method. People have seen this.
I mean, it's better. It's basically another community aspect of investing. It's everybody putting in, their share in order to be able to unlock a opportunity or an investment model that wouldn't normally be offered even at that level. Yeah, to an individual investor.
Okay, and
so
if I want
community aspect in mind, I think.
Yeah, thanks, Dan. So let me ask a question really quick. Let's say I pooled my money into this. I want to get my money out. Let's say there's a little bit of profit there. How long does it take me to get my money out of this?
Yeah, another good question. So there's a 30-day drawdown on any one of the tiers. Okay, so if you liquidated on the first, you would have your capital released back to you on the 30th. Or before, maybe, but ultimately it's 30 days maximum drawdown. Yeah.
Excellent. So just so people know, in the traditional finance world, that's very liquid to get your funds out in 30 days, especially you guys typically have a 12-month vesting period. So 30 days to get your funds out is very liquid, just for anyone listening. That sounds like a lot in crypto, and it is, but this is not crypto we're dealing with here. This is a whole other beast, so to speak. But,
and I would say that's a maximum, of 30 days, should we say, as well, because I anticipate, drawdowns being actioned and executed a lot quicker than that. Okay, but to cover, Gaxsys side and XETA side, I would say 30 days.
Sure. And again, just to reiterate, this is available at 25 zones. Why 25 zones? The reason is because there is a bit of a balancing act that everybody has to understand of people investing enough to get access to these services versus, not making it so out of reach that you need like 200 to get there, right? I mean, it has to be something that's relatively within range. I mean, even if you have 5 zones, this is relatively within range to compound to, right? And of course, to kind of soften the blow on this, we did announce yesterday that anybody who buys a zone into pre-sale is going to be earning 0.12, not 0.1. So that actually helps you compound that much quicker. So the first service, 25 zones, and this is just the first of 3 for this quarter. There are going to be other services available if you have less zones, more zones. We're going to have a full catalog available. No matter what zone level you're at, we'll likely have something for you down the road. So just kind of bear that in mind. Why don't we... What I would like to just add on is that there's a performance fee, and I'd like to obviously be completely transparent with that. Yes.
So the performance fee is actually a special commissioned rate, okay, for XETA. So it would usually be higher. It's at 2.5%, okay, for the blue chip model. So we would charge so Gaxsys and XETA collectively are charging 2.5% performance fee.
And that's annually?
So that's on the profit. So if you were to invest on the first and then you withdrew your money on the 30th, even in 30 days, and you made 3, 4, 5%, you would be charged the 2.5%. Sorry, you're right, it's annual. So it would be charged per day for however many days you've been in there.
I gotcha.
In the
Oh, okay. Thank you. I totally forgot to ask about the performance fee. Thank you for that. Appreciate it. And I do know that every service has a different performance fee. So if I don't remember to ask you that, just feel free to hop in again, as we move forward here and bring that up. So the private equity, That's a very interesting one. You know, a lot of these services are services that are well outside of the reach of most people, including myself, in crypto. I look at private equity and I think, how would I get access to private equity unless I was in something like XETA and own zones? There would be no way that I would know personally to get access to private equity. So why don't you talk a little bit, what is private equity? How does it work? What are your typical ROIs? Just kind of the whole same thing.
Yeah, so private equity is really probably one of the most exciting investment models you can get involved in. And like you said, it does have, sort of a pedestal in the financial realm, where, a lot of private investors or even uneducated investors would unknowingly think that it's, extremely high end and hard to get involved in. So it has almost like a prestigious factor about it. But so private equity, for those of you who don't know, okay, it is very simple to understand. Private equity as an investment, okay, is when you buy shares in a company that isn't publicly traded. Okay, so let's take XETA LLC, for example. Okay, if I was to purchase shares in XETA today, OTC, okay, so that's over the counter, because it's a private sale of shares between two parties, I would buy the shares with an expectation, obviously, of those shares, proceeding to increase in value, and potentially one day XETA would look to go public, usually in the form of an IPO, which is an initial public offering for you guys who don't know. And it would be, it would have the aim to be listed on a public made market exchange, okay, where you could then exit, i.e. sell your shares, okay, onto the main market at market price. Does that first bit make sense to you?
That makes sense to me. Yes, sir.
Cool. Okay, so just to simplify that, if I bought shares in a company, okay, privately, usually the company, like any company, would look to raise capital, okay, in order to expand or offer more services. So a lot of companies do this by offering a stake in their company, okay, to private investors.
Sure.
But because this company, let's say, i.e. XETA, is a new company, okay, it's got a long road ahead of it, let's say, before it gets into a really strong financial position. So you as an investor would be taking a lot of risk. Okay. In fact, an investor that invests into a private company is taking all the risk because they're actually buying shares, and the only value they have after the transaction of that capital to the company is those shares. Okay. So obviously, as an investor that's taking risks, you would expect to be rewarded for that risk. Okay. And you may buy, let's say, the shares, for example, at 10 cents, okay, on the dollar. Because this company is a small company and, the company is obviously new, but with the right management and vision, obviously a company can grow very quickly, as we all know. And I'm sure XETA is going to. Okay, so you grow your 10 cents, let's say, to 50 cents, okay, a year. That's 500%. Yeah, it doesn't seem like a big difference, 10 cents and 50 cents, to somebody that is just looking at it from a financial aspect. But 10 to 50 cents, obviously 500%, okay, on your initial investment, and that would be in the first year, because a company can grow from being worth 10 cents or a penny, should we say, to 10p in a year very, very quickly. Now, let's say 5 to 7 years down the line, okay, when the company files to go public, that 10 cents is now worth $20. Okay, that's 20,000%. Okay, in 5 to 7 years. So you can see what I mean about the investor being rewarded, yeah, for their patience.
And you've seen these type of returns before, Dan, at Gaxsys?
So this is common with private equity. Okay, this is an illusion, okay, that a lot of people don't understand. With private equity, every company starts off with a base value, doesn't it, of almost zero, should we say? Because most companies, they all start as an idea, don't they? Anything, Tesla, SpaceX.
Absolutely.
They're perfect examples. Yeah, it started with Elon having an idea. Okay, and that idea is then you as a private investor need to gauge that idea. So this is where the risk factor comes into it. You need to gauge what you reckon that idea is valued at. Okay, that day, and obviously, as a business, you would then present your investors with a roadmap, wouldn't you, of how you plan to achieve and to manifest that idea, okay, into reality. So with private equity, obviously, a lot of people believe, that those sort of percentiles, are sort of only achieved and in the crypto world. That's actually pretty common for crypto investors to think, well, they love crypto because of the aggressive returns.
Sure.
But crypto investors would love private equity because private equity, commonly companies are valued at like 50 cents. I mean, if you speak to any ultra high net worth entrepreneur out there, they will have invested at some point in private equity, 100%. And they probably would have it in their top 5 best performing investments of all time on their portfolio. 2 or 3 of those investments would have been private equity, and you guys will be hopefully able to identify with that, because if you're an avid YouTube or social media watcher, you see those short clips of Dragon's Den. Dragon's Den, I think it's only a UK. I mean, Dragon's Den is over there in the US.
It's Shark Tank over here. Shark Tank.
Shark Tank, that's right. Yeah. So if you look at any of those, those boards, should we say, the board members, okay, they will have invested into companies like Amazon, okay, and Tesla being another one, but Klarna, obviously Airbnb, okay, Dropbox, Slack was a great one. All of these companies at the bottom level, okay. And if you look at online and do a bit of research, you'll actually see that SoftBank's Vision Fund, the returns are astronomically insane on that private equity fund, and they invest into these companies, okay, these fintech companies like Uber, Airbnb. They're in every single fintech you can imagine. And the best part about obviously companies like SoftBank investing into these companies is it then gives the trigger and the signal to companies like Gaxsys and any other financial institution out there that, hang on a second, we should be investing in that company, because a company like SoftBank that has basically a blank checkbook will be able to do whatever it takes to push that company, to go public.
Gotcha.
Does that make sense? And so you're piggybacking on the back of, companies like SoftBank almost.
You're right. And when you hear about people like on Shark Tank, you'll hear, earlier investor in whatever, Uber. I think Chris Sacca was one of them. Early investor in Uber or this or that. There's a lot of private equity. So what is a performance fee you take on this? I would imagine typical ROIs is not something you can really share because it just kind of depends on the company.
Yeah, so just a bit more information on the private equity sector, okay, and then I'll circle back to basically the performance fee associated with the account. I mean, obviously the 20,000%. I was giving you an example on the 10 cents to $20. Okay, that's actually before the company's even listed. Okay, the share price is trading now, and obviously you could then see a company skyrocket 200%, 300%, 400% just on trading day. Okay, when you would obviously go to liquidate your shares. But the reason I'm explaining this to you is because obviously as a financial institution, we don't like the word risk. So what we do is we limit the risk. Now, there's a number of ways that we can limit the risk. The first way, okay, would be investing into what we call late stage IPOs. So this is where the Gaxsys strategy comes into it. Okay, we invest into late stage IPOs. So we invest into private companies that we know will be listing in the next kind of 12 to 18 months. Okay. Now, IPOs tend to delay regularly, okay, so we always look for a company that has at least released information that they're looking to file their S1 with the SEC and with the New York Stock Exchange in the next 12 to 18 months, which means that we don't have to wait, obviously, the years that I was mentioning to see the return, okay, as a company's valuation, okay, we don't have to obviously wait for 5 to 7 years then to see that thousands of percents return, okay, on the company valuation. Now, obviously, with a private company, the share price is determined on the entire company's valuation. Okay, obviously that might sound normal to a lot of people, but I'm just reiterating for anyone that doesn't know or doesn't come from a financial background. And obviously, the share price can increase by 200-300% a year very easily. Okay, especially if that company is releasing plans in the last year to list onto a main market stock exchange.
Sure.
Okay, and more investors would obviously deem this company to be a safe bet because obviously they're a main market listing. Okay, and they look to invest into this company, and so the demand, obviously, for the shares is higher, the supply is less, which ultimately increases the value. Yeah, obviously, standard. Okay, but not obviously all companies follow, kind of this explosive model. Some companies flop. Okay, we've obviously seen quite a few of them. Not every company we invest into is a winner. Okay, and so another way of limiting the risk is actually by diversifying into 10 or 20 companies. Okay, so now that's where Gaxsys comes into it, and our private equity fund. Okay, it's one of our key areas, and it's actually a huge perk for zone holders. Okay, because this unlocks this particular private equity opportunity that can be only offered really through XETA to private investors that aren't ultra high net worth investors, okay, that would usually qualify for this type of account. Usually to invest into a private equity fund, the minimum investment level would be 250,000 sterling. Yeah. So maybe $500,000. And that capital would be tied up for 2 to 3 years at best. So you would, need you need to be in a pretty strong financial position, yeah, to open up an account with a private equity firm and be happy for that capital to not be touched for 2 to 3 years.
Right. And that's the thing. A lot of people are looking for a quick turnaround. Private equity really is more of a patience game. I do understand. What's a performance fee that Gaxsys and XETA takes on the private equity?
Yeah, so the performance fee, again, is a fee that has been negotiated, okay, especially for XETA, and it's 15% performance fee per annum. Okay. There is no management fee either. Usually with a private equity firm, there's a management fee. We're not charging any management fee. We've waived the management fee. So obviously, because, Gaxsys has a vested interest in XETA as a company. So, there is no management fee. It's a 15% performance fee. Okay. And that leads me on to, you have to have 50 zones to unlock this tier. Okay. And this model. And the pooling amount is $50,000. Which is an amazing achievement, yeah, for XETA to negotiate that with Gaxsys.
Yeah. Well, when you're talking 250K minimum and it's 50 instead, that is, everybody needs to also remember too, to even become a member or a client, I should say, of Gaxsys, $10 million in assets minimum, 25 million in cash. I mean, this is having zones is already a workaround, and on top of that, Gaxsys is then negotiating even lower entry points, as if it wasn't already low enough to begin with. So 50 zones. Keep in mind that if you have 25 and you will have access to the blue chip, that's doubling, right? So that's basically 100 days if you were in the pre-sale, a little less than 100 days. But again, these are the tiers that you have to understand. The 50 zones seems like a lot. And it is if you're just starting out. Of course, you can work your way up to all of these. But the people who are doing this are also stabilizing and keeping kind of on an even keel the token price for everybody below them as well. It's another kind of factor that everybody has to kind of factor in as well, is that the whales, I mean, I don't think 50 zones is a whale, but when we come out with tiers down the road for lower and higher, it will all even out. So that's just something to bear in mind. So 50 zones for the private equity. I think private equity is very, very interesting, very fascinating, very exciting for people in crypto who don't have access to this sort of service. Anything else you want to add on to that before we move on to the high frequency trading?
No, but I would say that they'll obviously everything that we're speaking about, there is a lot of documentation online, okay, and prospectuses and information freely available for you to read and digest in your own time. Yeah, for our website, XETA.
Excellent. Yeah, like I said from the beginning, I'll say again, as we get closer to these being released, you guys will have more information you probably even want to read, to be honest. You will be inundated with it. This is just kind of an early teaser of it. High frequency trading. High frequency, that's kind of the, I should say trading bots is kind of the trigger word, I should say. But people in the Discord have been super excited about this. Why don't you share kind of what these are, how they work, and all that?
Yeah, so although the other two tiers and the other two investment models I mentioned are actually, pretty common within investment banks and institutions, high frequency trading is another, or trading at least, is another obviously common traditional investment model. But there are a few unique aspects of this model with Gaxsys, okay, that other institutions and other brokers don't have available to them. Okay, so a lot of people out there will have heard, obviously, the term used before, HFT or high frequency trading. Okay, there's lots of trader systems out there now on the internet, social media. Okay, they claim to have institutional grade algos and bots, and there's a lot of trigger words that they use. Okay, but what a lot of people don't know is that your trading model, okay, or system, to actually have it adopted by an institution, so for it to be classed as institutional grade, okay, you would need to have at least a 5-year audited track record. Okay. And although, spread betting, CFDs, Forex trading is all considered high risk by regulators, you would need to actually prove a model that limits and hedges the risk, okay, through longing and shorting the market. Now, a model that that can actually quickly react to the market. So you need to, I'm saying, have a checklist, which a lot of people don't realize in order for you to get that classification. Okay. So carrying on, you would need a model that can quickly react to the market. Okay, no matter what the conditions were. It's almost like an AI, artificial intelligence grade system. And it's not just down to, whose model performed best. It's about the sustainability of the model and limiting your capital to as much risk as possible. Okay, so anyone that's traded before will agree, that the majority of trading actually and stress associated with trading comes from emotion. Okay, that's usually because of leverage. I'm sure there's a few people out there that have been over leveraged at any one point and can't sleep because of it.
Yep.
Yeah, so all of these factors, emotion, leverage, add to the risk associated with trading. Now, you will have, more than likely, you will have all heard, okay, that the pitch that obviously, if you use this bot or this algo, it removes the emotion from trading, okay, and then this obviously to a certain extent removes the risk, okay. Now, the reason a bot or an algo is important and actually invaluable to banks and institutions isn't really because of the leveraging or the emotion, okay. It's actually because they operate 24/7. It's a software, isn't it? It's machinery. So it operates 24/7. It doesn't need to eat, sleep, rest. It works around the clock and uses obviously analytical data to read the market conditions and determine when and which trades it's going to place. Okay. So our HFT console and algo, okay, I just want to clarify this. With anyone that says to you they've got a bot or a trading bot or anything, that consists of two different elements, yeah? So you would need an algorithm, okay, which gives the signals, yeah? Like you would get on any kind of website in the minute, you can sign up and you can sign up to a signal service, yeah? So you get a signal service on Telegram or WhatsApp or wherever nowadays, or through email. It used to be through email. And that is basically an algo, yeah? That's what's classed as the algo. It's something that's artificial in the sense that it can determine, signals, okay? That it shoots out to a piece of software, which would be the console. So any algo, any bot out there, trading bot, consists of two main elements, which is obviously the console and the algo, okay? And together, they make, depending on how good each piece of that puzzle is, it creates, a world-class trading bot or algo, okay, which is a sophisticated signaling service that tells the console when to execute the trades. Okay, now the volume of trades processed and the value of that actually depends on the risk associated with the account. Okay, so you can obviously set any trading account to a certain level of risk, and then obviously that risk will be taken into account by the algo, and the amount of capital that's in the account. Obviously, the algo also takes that into account, and that's what determines the volume or the value of that trade that's placed through the console. Okay, so let me explain it from a simple aspect. So if you can imagine for me like a tick indicator. Okay, so imagine 3 ticks is a strong, almost certain signal, okay, in the high 90s percentile of accuracy, and that trade will long or short and hit our target price, yeah? Okay, so 3 ticks is the strongest. 2 ticks would be, 80s percentile and so on and so forth. So 3 ticks is the strongest, down to 1 tick. Our model and system will determine and the value of that trade, okay, and how strong that trade would be down to the signal and the amount of ticks associated to the signal. Okay, does that make sense so far?
Yes, sir.
Okay, so our console then handles the execution orders of the signals. Yeah, so this is the software we're talking about now. We are actually the sole proprietor, okay, of our console. Okay, and the beauty of the console is actually the high frequency aspect of the console, because you can get many consoles which are, just a normal trading console, which is basically an automatic bot which will place a trade once it receives the signal. But our console has that high frequency option and aspect, okay, which makes and allows the automation. So the console allows us to buy and execute trades, buy and sell, so long and short positions simultaneously, okay, at an astronomical frequency, okay, but it can actually place the trades at an automatic 1 point limit, okay. So for anyone that I'm losing, a 1 point limit is when you would place a limit order on any trade, okay. It's basically a order that you give on a trade that's already placed, that once you're in 1 point profit, okay, or £1 profit, or $1 profit, or 1 cent profit, or $100 profit, it will automatically close that trade. Okay, I'm going to use the term 1 point, okay, just to simplify it, because obviously there's a number of different currencies out there, as you guys, I'm sure you're aware. So 1 point limit order, okay. So for example, let's say that the algo spits out a 3-tick signal. Okay, so this is the strongest type of signal, okay, and it's 99% of the time the target price for this signal is going to get hit. Now, the signal is sent to the console to execute the trade. So because this signal is so strong, the console executes the order of 100 buy, okay, orders, okay, and trades, which opens up 100 long positions at $1,000 a point simultaneously with a 1 point limit order. Okay, so you've got 100 positions open simultaneously. They're buy positions, they're long positions, sorry, at $1,000 per point, okay, simultaneously.
Okay.
Now, all the market needs to do is move 1 point up, obviously, because it's a buy order, so it's a long position, so the market needs to go up 1 point up, and the trades are all then closed simultaneously, which gives us a total of $100,000 profit. Okay. Wow. Now, this whole process will have taken place in a couple of seconds. The actual signal and orders can be given in milliseconds. Okay. Obviously, the market movement, we have no control over that. Now, I imagine some people obviously out there are thinking, let's say that the signal doesn't go the right way, okay, which is common.
Sure.
And it goes the wrong way, and the market moves down. So the algo knows, okay, every position that's open, by the way. So it knows our exposure to risk, and it takes that into account, okay. But circling back, the market has moved against us, okay, and is falling. So the algo's initial strong signal is still in place. So it obviously still believes it's going up, yeah, but the market is falling slightly. So what that actually will do is it will take into account the account balance, and it will obviously understand that, look, the market's moved down, but my target price is still there, and it actually thinks for itself that that there's actually now more room to execute more trades, okay, at 1, 2, 3 point limit order, and to take more profit on the way back up to the target price. So this sort of console, guys, is special, and it's classified as institutional grade, okay, not just for the reasons that I previously mentioned, but remember, the console can execute buy and sell orders, okay, at the same time, covering both directions of the market. And because of the 1 point limit order, okay, that can be placed on every trade, it can continuously and simultaneously executes. This means that you can trade even when the market is flat. Okay, so for those of you who don't know, the term flat is used when the market isn't moving. Okay, it's just bouncing between two very narrow lines of support and resistance. Yeah.
Sure.
But if you have a console like our console, then this sort of market movement can be very profitable, obviously very quickly. So a lot of traders say they need market volatility. Okay, and market volatility is your friend. And that's true because they need the volatility in order to make trades and make hopefully profits. But with our console, obviously we need the market to just move 1 point, don't we? Theoretically, that's it. So if it's 1 point up, 1 point down, 1 point up, 1 point down, we're achieving profit up and down, yeah, in the market simultaneously. Now, obviously, there's some more exciting news. Basically, later on, okay, at some point, okay, we'll be able to do a screen record for the community, which will be a live session whereby I can actually show our community the live console, okay, and manually I'll be able to execute trades on the console, almost like a demo. Okay, so you guys can actually see exactly what I've explained. And there's actually a few more features to the console, which I've not even mentioned. But it would just be easier, if you can imagine, obviously, to see it, and for me to explain it while we're on sort of a live screen share for everyone, than explain it any more now, if that makes sense.
Yes, absolutely does. Thank you for that. Would you mind sharing, like, what are some common ROIs that you see with the high frequency trading services, and then what would be the performance fees and the minimum investment for folks?
Yeah, so the minimum tier to unlock it is 75 zones. Okay, so just so everyone knows, it's 75 zones, and it's a $75,000 dollar pooling amount. Okay.
Okay.
Now the performance fee associated with the HFT trading again is a special, it's a special fee of 25% that Gaxsys and XETA will receive, and that will be distributed, accordingly between the companies. It's still a very, very competitive fee. People might think 25%, that seems like a lot. Is not. Okay. A 25% profit share on an institutional grade, algo bot console, whatever you want to call it. It is very, very competitive. I think you guys would
Excellent.
agree.
Yeah, yeah, well, absolutely. And so let me just ask, I know that there's a lot of different algorithms, there's a lot of different trading bots, there's a lot of different, commodities and things that are being traded. Is there a kind of a typical ROI that people should expect to receive in this high frequency trading?
Yeah, so the average the average performance of our bot, okay, or I say our bot, you've got me saying bot now, the algo and the console, okay,
Right.
that we've got is over 1,000% a year. Okay, that's the average. It's actually as high as 2,300% in 2020, and we achieved over 2,000% again in 2021 using our console. That's probably because if everybody thinks back a couple of years, obviously we were in COVID. I don't know if anybody watched the markets during that period,
Sure.
but they were extremely volatile. So there was a huge opportunity to be in the market and making money on a daily basis. So the average return on investment, and once again, it is speculative, okay, for the
Sure.
HFT model, could be anywhere between 50 and 100% a month, I would say. And that's me, I'd say let's be conservative. Let's say between 50% and 75% a month. You could see, but that's not going to happen on a monthly basis, consistently. And I'm not saying that is going to happen every single month. We always go by a track record of obviously per annum. Yeah. So if I say that it achieved a minimum of 1,000% per annum for the last 5 years, and sometimes much higher than that, then we could maybe achieve 200-300% potentially, which we have done in 1 month. Yeah. And then we could
Wow.
have a losing month of 25%.
Wow.
Okay. I will say one thing: we haven't had a losing day in over 498 days on one of our systems. So
So
it's been over a year,
it's
a year and
been
a half.
almost 500 days since you've had a losing day. Is that right?
On one of our systems, correct? Yeah, on one of our trading systems. And like I said to you before, there is a number of different systems, okay, and they are all associated with a different level of risk. Now you're probably thinking, okay, great. What system are we going to use? That obviously this will be determined by us, depending on the amount of capital, okay, that's invested. And obviously, depending on the frequency of withdrawals, there's a number of different factors, yeah. But obviously, we're going to utilize the capital as effectively as possible. And I'm giving you sort of a speculative ROI, okay, and forecast
Sure.
of
Sure.
50%
Sure. So
per month. Sorry.
there's folks I saw in the Discord speaking about high frequency trading and trading bots, and they use a lot of different ones. I could be wrong. I don't think anybody has used anything like this. This is so when you look at, for example, you say, "Gosh, 75 zones. That's a lot." Well, yeah, it's up there, but if you look at what this is capable of doing, I think you'll agree 75 zones is actually relatively a deal And this is all a deal, given the fact that typically, none of us would be able to be at the level to even be a client of Gaxsys. So when we're talking about the kind of numbers we're talking about, 75 zones actually seems rather small.
Well, 75 zones, it almost is basically you as a community member giving and showing us your confidence in us, yeah? Which then we reward that confidence, obviously, by allowing you to enter into, a particular system or model that's going to be extremely aggressive, yeah, and benefit you. But it works both ways, yeah?
Yeah. So again, a lot of the financial services that we're talking about here, three of them, just three, there's way more Gaxsys users than just three, are the tools in the tool chest, so to speak, of growing the investments and the profitability of XETA. And what essentially is happening here is you folks who are involved to a certain degree can get access personally to those. That's essentially what we're doing. So down the road, you're going to have maybe 3 or 4 or 5 or 6 or 10 or 20 more services that are going to be available, something to that degree at all sorts of zone levels. So again, when we talk about blue chip, we talk about 25 zones, 25,000 minimum, pooled amount. When we talk private equity, it's 50 zones, double, with a 50,000 minimum pooled amount. And then, of course, high frequency trading, which is not double from the private equity, but is tripled from the blue chip amount at 75 zones and 75,000 pooled minimum. These are services that, to me, give real utility to the zones. I mean, I look at these and I would think, as somebody outside looking in, maybe I'm biased, I don't know, but I would look at this and say, well, I can sell the token, of course, right? And, if someone wants to sell the token to get their ROI back, I encourage them to do that. Then I look at these services, I'm thinking, well, or I could work my way to these services and just move my rewards into these services and make, probably significantly more, to be completely honest, and actually take advantage of these sort of rare traditional finance services that you could never get access to. We are working on a way to migrate your rewards over without selling the XETA token, right? So, kind of picture you've got 25 zones. You got, I don't know, let's just say $10,000 worth of XETA rewards and you haven't claimed yet. You can claim and move them over into the blue chip, for example, without ever selling them into USD. Same for private equity, same for the high frequency trading. This also protects the price. This gives far more utility to the overall ecosystem. And I think, me personally, I'm really excited because this is the type of stuff that has not existed yet in crypto. And to be kind of the first project to sort of bring this to the blockchain world, so to speak, I'm very excited. I know from your guys' perspective over at Gaxsys, you're kind of looking at it from the opposite point of view. But I'm just very excited to be able to bring this to people because I think this is something that can actually provide real utility to change people's lives, aside from just participating in another circular reward, kind of system.
Yeah, definitely. Agreed.
Yeah, well, I want to thank you guys for joining us today. This is just a quick sort of overview of the zones, the zone tiers, the financial services, what they look like, the minimum amounts, and all of that. As I said, as we mentioned many times here, actually, there will be screenshots, video. Probably I'll get all this stuff uploaded, and we maybe even do some live sessions of the actual console and all the different services. You will be drip fed plenty of information to be able to make as best of a decision as possible. And that's the goal here, is to not just drop things on you, but to give you plenty of time to make your decision. So I want to thank you again for joining us. And until next time, take care.